kind of shifting focus here back to more advanced. And if it isn't obvious by the image on the screen, we're shifting back to Canada here as well. And I think that's one of the themes that I'd like to kind of circle through this presentation is location. And I will be weaving location, grade, size, and growth in and out throughout the presentation, as I think those are key themes that really differentiate Pure Gold and our Red Lake project. In my mind, there's no better place to build and operate a mine than in Canada. You've got a strong regulatory environment. Personal security is not an issue. Land tenure is not an issue. And importantly, and this kind of follows on with your discussion, Gwen, in a rising gold market, we're also seeing a declining Canadian dollar over the last year. And so effectively what we're getting here is a double bump with our own project moving towards first ore delivery of the mill in Q4 of this year. I will make some forward-looking statements, so I would caution you on that. So it all started 2.7 billion years ago, and I'm going to spend a few minutes here just kind of setting up the setting, if you will. In this image, you can see the Red Lake mine complex. In Red Lake, Ontario, we've seen 30 million ounces of gold produced over the last 80 to 100 years, and really comes from a style deposit that's well known worldwide and shares many characteristics. These typically generate long life mines. They have long strike lengths. Volumetrically, they can be quite small, but they pack a huge punch with high grade. Typically underground mines and often some of the highest margin mines that you'll see. So what we have here is a very much a simplified geological map. We're looking at the Red Lake camp here, and I'm not going to go into a lot of great detail here, but when people ask what is Red Lake, I'll give you my view on what Red Lake is. You want to be in the green. The green rocks there are known as the bomber assemblage, and they have the right chemistry, the right rheology, so they're the right preparation for forming large-scale deposits. And you also want to be along the break between the green rocks and the yellow rocks, these gray squiggly lines as they're shown on the map here. Those are the fluid pathways, if you will. They're big fault lines. That's what drove the deposition of the gold deposits. And so that combination of the right rocks and the right structure is where you want to be. And when we look at this, there's really two areas that are highlighted to the north of us at the same scale is the Red Lake Mine Complex, which was recently purchased by Evolution Mining. And on the southern end of the belt, there's Pure Gold. We hold 10 kilometers of that structural break. We've got the right rocks in place, and we have it all. So what I'll do next is show a block cutaway, kind of showing the corner here between our project and the Red Lake Mine Complex to the north of us. And so there's a block diagram. On the right side, you can see the Red Lake Mine. On the left side, you can see our own Red Lake Mine. And really, the resemblance here is very striking. They have the same geometry. They're of the same scale. Geologically, again, they're in the same rocks, the same structure, the same timing of mineralization. Really, they're in all respects, they're identical. I guess what I would say is the only difference between the two is that the Red Lake mine on the right has 30 years more mining. And so if you strip back 30 years, it would look identical to what we're looking at on the left side of our image. In fact, when I was chief geologist over at the Campbell mine, which is centered on the shaft, which was being sunk at the time, we were mining down to about a similar depth, about 1.3 kilometers below surface. The high-grade zone was discovered shortly after that, and I'll just kind of highlight it on the screen here. That high-grade discovery really transformed the Red Lake Mine Complex, and it generated, effectively what turned out to be a $20 billion in Gold Corp. That all came from that one discovery deeper down in the mine. And at the time, it was the lowest cash cost mine in the world. Shifting across to our project, we've got resources and reserves defined down to about 1.3 kilometers. We've got our own version of the high-grade zone sitting right here. That's known as the 8th zone. And it's 2.5 to 3 times the average grade of the overall reserve. We're really excited about getting down to the 8th zone. But again, if you reflect back to what I said earlier, these deposits being very deep-rooted, we have every confidence that our deposit persists to depth. In fact, there's a hole that intersects the deposit at 2.1 kilometers below surface, running nearly half an ounce. That really gives us that high degree of conviction that our deposit will persist to depth. So we're quite excited about that growth potential. When you look at our project to date, there's been 2.5 million ounces of historical production that's come out of there. It is a brownfield site. We've got a current indicated resource of 2.1 million ounces at 9 grams per ton, 500,000 ounces of inferred resources at 8 grams per ton. So overall, collectively, you're looking at a 5 million ounce system here. So this is a large mineral system. Again, we're only looking at the first kilometer, and we think that there's every reason to expect it to continue to depth. Shifting. What we've done here is we've projected resources and reserves to surface, and they're color coded. The red that we see here forms the first phase of our phase development approach. It's our mineral reserve, where we have a probable mineral reserve of 1 million ounces at 9 grams per ton. The pink areas are discoveries we've made over the years that are near surface that are not considered as part of that feasibility study that we completed a year ago. They're not part of our first phase, if you will. But there are areas that we're really excited about. We've made discoveries, we've drilled them, we have resources there. In fact, we've even done some early stage engineering work, some scoping level work, if you will, to look at how they might be mined, what kind of productivity you'd get from them, with the thinking being that ultimately we can mine these in conjunction with the phase 1 mine plan, potentially through an expansion of the plant. I'll draw attention to some of the high grade you see on here. The 8 zone is shown right here, and just to illustrate it, in terms of it being our high grade zone, you can see some of the grades that have been drilled into it. 4.3 meters over 466 grams over 4.3 meters, 140 over 5 years. In fact, smaller intervals are into the kilos. It truly is a high grade zone. I think the one thing I want to illustrate here too is the scale. When you look at the south end of our wedge discovery and project across to the north end of our phase 1 mine plan, we're looking at 7 kilometers. So again, this is a very large system that we have in place here. And so when you look at the amount of drilling that's gone here, 1.3 million meters, it gives you a high degree of confidence about the mineral resources and reserves. In fact, when we look inside of our game plan and you look at what's defined the reserve, what was used to estimate it, we've got a drill hole every 6.5 meters. So the density of information there with 1.3 million meters of drilling, 6.5 meters spacing between drill holes means that we know what the grade of the gold is, we know where the gold is. And those are important factors as you go into mine. You want to have that confidence that the deposit is well understood. As a further check, about 18 months ago, we initiated a test mining program. We went into 2 stoping areas from an earlier study, and we extracted material that demonstrated that we were reconciled to our resource model, to our geological model, within 1%. We were 15% higher grade, achieving a grade of approximately 10 grams per ton. And in the process of conducting test mining, we discovered another area such that we ultimately extracted 55% more ounces out of that area than we had planned. So again, another really good, strong validation of the underlying resource. So what does all that high grade look like? This, I think, is a really compelling image here. This is a long section now running along the length of our mineral system, and you can see a 10-kilometer span there. What we're showing is every drill hit that we have on the property. That's the 1.3 million meters of drilling, and it's color-coded by grade. Each one of those magenta blobs that you see is an assay interval that runs 10 grams per ton or higher, and there's 13,700 of them. So you can see the robustness of the mineral system. The phase 1 mine plan is focused in this area. That's where we have our 1 million ounce reserve. 9 grams per ton. But stepping across, you can see some of the discoveries. This is known as the fork zone. This is our wedge zone. Collectively, they're open for expansion. If you drew an imaginary dotted line based on all these high-grade hits, you'd see how much white space there is and how open it is. The base of our reserves is targeted 2 years ago by drill hole 34.6 over 4.3 meters. Again, we have a half ounce over 2 meters at 2.1 kilometer depth. When you do the math and you look at what's up in the top kilometer, we're adding about 3,500 ounces per vertical meter. So we think there's real strong potential over the next kilometer to generate the next 3 to 5 million ounces. Just before I step away from this, I'll draw your attention to the 8 zone. The 8 zone sits right here. And again, we can see some of those grades. It's also open. We did something quite simple when we acquired the project. We projected it up to surface in an area that we called Russet South. We started drilling there, and we've now got a mineral resource up dip of the 8 zone. More recently, we structure in the gap that we see between the Russet South area at surface and the 8 zone at depth. And in that gap, we intersected ore grade intervals over narrow widths within a broader 50-meter pattern of 150-meter wide zone of a gram per ton. We hit the structure, and we're really excited about that potential to continue to target between what we see at surface and depth within the 8 zone. As part of our mine plan, we'll be ramping down in the footwall of this mineralization that you see here in the footwall of our reserves, and we'll be targeting the 8 zone for expansions down plunge as well, and we're really quite excited about that. So let's talk about the numbers, and I will highlight that this is already out of date. I think even the global pandemic crisis that we're in right now, we were setting up quite constructively for gold. With increasing government debt, declining real interest rates, I think all of that has been very constructive. What we're looking on the screen here is from our feasibility study for that phase 1 mine plan, and it's from the sensitivity table at $1,500 per ounce, which translates to 2,000 Canadian. This morning, we're trading at a new record high in Canadian dollar terms at $2,440 an ounce. So you can see we're already $440 an ounce above these numbers. If you look at that phase 1 mine plan, 1 million ounces at 9 grams per ton in probable reserves, that's $440 million of additional cash flow just on that move alone since these numbers were put out. Even looking at this though, we're generating after-tax free cash flow of $600 million. We've got a net present value of $400 million. And what's driving that is grade. At 9 grams per ton, this will be the 5th highest grade mine in Canada and the 17th highest grade mine in the world. That puts it in about the 95th percentile. Looking at the all-in sustaining cost of sub $800 an ounce, at today's metal price of $1,700 per ounce US, we're generating $900 of margin on a per ounce basis, or about $1,250 Canadian. So very rich economics. But I want to remind you that this is phase 1, and we have scale, size, and growth potential property. So I want to touch on just a bit more on the economics that we're seeing here. This is a cash flow bar chart that we're looking at on the screen here, and it's color coded by metal price, if you will. The red is our base case, $1,275 per ounce. The pink is the numbers I just showed at $1,500 per ounce, and the gray is today's metal price. So you can see that strong leverage to gold price where we think that we're effectively showing an expansion of the cash flow by about double with the move in gold price. Now talk a little bit about what's happening on the site today. We construction in August of last year. We're fully funded through to production, targeting first ore delivery to the mill in December of this year. On the ground, we started underground pre-production development in December, which is about 5 months ahead of plan, and that was a very deliberate decision to open up the mine quicker, to access more working areas, to push down deeper, faster towards the high-grade zone that we have. And I can say that to date, we're averaging about 8-meter advance rate per day versus a plan of 5 meters. And so we're doing better than 50% better than our plan. And both of those things combined mean that we're going to have more opportunities to sequence the stoping, bring high grade forward, and compress the scale towards the left. In other words, we've smoothed out this gap and we're pushing cash flow to the left. In fact, the strong cash flow that you see in year 5 and 6 is when we're entering the high grade zone or 8 zone, and recent work shows that we may be able to bring this as early as year number 3. And so we're really quite excited about that. I also want to address this decline you see on this image after year number 6. We don't believe that's real either. Again, recall that we're working on our second phase right now with near surface discoveries. We already have resources there. We've already done early stage engineering, and we're going to continue to explore to grow those resources, looking to layer them on concurrently with what you're seeing today. In addition, given the deep-rooted nature of these deposits and our expectation to continue to be able to develop resources and reserves down dip, we see this stabilizing out into the long term. So what we say here, turns out when they abandon these mines, they barely scratch the surface. And this phased approach to a scalable asset, we're just getting started here. We have a real strong growth profile ahead of us. It also reflects where the real value generation has come in our sector over the last decade. You look at the Red Lake mine, I talked about the high-grade discovery there. It generated a household name, Goldcorp, and a $20 billion company. More recently, we've seen that success replicated elsewhere, including Kirkland Lake Gold, where the Macassa mine and the Fosterville mine, both brownfield sites, are generating enormous cash flow now for Kirkland Lake Gold and have turned them into a $16 billion company. We think that kind of potential exists here, and that certainly would drive some of our key marquee investors to invest in Pure Gold. here you can see the world's number 1 and number 3 gold producers, Newmont and AngloGold Ashanti, are shareholders. We've also got 2 mining titans, Eric Sprott and Rob McEwen, both who are familiar with that kind of transformational growth. Rob through founding of Goldcorp, and Eric Sprott through his investment in Kirkland Lake Gold. So we're on plan, we're on schedule, we're pouring gold before Christmas. I'm really excited to bring this project online, and just want to remind you, this is very much a phased development approach. When you look at our project right now, I think we're timed perfectly in a constructive rising gold market with a depreciating Canadian dollar means again that we get a double bump as we move cash flow. This strong cash flow generation straight out of the gate will enable us to self-fund our exploration and growth plans. Initially looking at bringing the near-surface discoveries into production, potentially through a plant expansion, and ultimately realizing some of that potential we see down dip, such that we believe that what we have in front of us is a multi-generational mine that really is Red Lake. So I'll just conclude by saying there's 30 million reasons, and they're called ounces, why Red Lake is Canada's Fort Knox. So thank you very much for your time.